Precigen has experienced a sharp rise in share price recently. You see right here it's up over 70% over the past 6 months and has increased over 20% over the past month as well. And the recent share price spike, which you can see here over the past 5 days, is due to shareholder excitement surrounding PRGN 2012, which is the top treatment in their pipeline right here. The excitement that we're experiencing with the stock at the moment is because we're gradually approaching the upcoming PDUFA date of August 27, 2025. And this PDUFA date of August 27, 2025 is the date that this treatment in their pipeline, PRGN 2012, will either be approved or rejected by the FDA. You can see right here that analysts have a whole host of different projections for the stock, and this again is largely to do with this PDUFA date and this anticipation that PRGN 2012 will be approved on the 27th of August. You can see the highest price target of $6 and average price target of $4.50. This lowest price target of $1.50, which is completely wrong and should actually just be totally ignored as well. On TradingView, you can see here that it states the two analysts offering 1-year price forecast for Precigen Incorporated have a max estimate of $6 and a min estimate of $6. And so I've been bullish on this stock for over a year now. You can see this video here I made where I first documented Precigen as an undervalued stock with huge upside. I've been gradually acquiring this stock over more than a year now. At the same time, it's really important to know that, when you're investing in biotech companies and early stage pharmaceutical companies, these stocks are incredibly volatile. You have to have an ability to withstand extreme highs and extreme lows. You can see right here my current average price is 0.97 in my Interactive Brokers account. You can also see that I hold 17,000 shares, and if you pause the screen you'll actually see a lot of the different metrics, how much money I've made so far if I were to sell today. At the same time, there are a number of things that I'm going to talk about, the PDUFA date, which is upcoming, and potential acquisitions, which is a typical thing that Randall Kirk, who is the majority shareholder of Precigen, does. This is a habitual thing for him. It's building out pharmaceutical companies from scratch, and then once they've got one treatment that's been approved by the FDA or about to be approved, he will then cash in on that company, and it's why he's amassed this fortune, this 1.5 billion fortune according to Forbes. So not only do I have 17,000 shares of PGen at a mean price of 0.97 in my Interactive Brokers account, I recently opened up a Trading 212 account as well. And you can also see that I've been gradually acquiring more shares of Precigen, which I bought at a mean price of $1.44. And you can see right here that in my Trading 212 account, I have 2,405 shares in PGen as well. And so like I said, biotech stocks, early stage pharmaceutical stocks are incredibly volatile, and it's been exactly the same with PGen throughout the duration of the time that I've held them for over a year and a half. I've actually had to withstand extreme lows. I had actually bought some more shares at a time when it was priced in around, I think, 84 cents. But, considering how many shares that I do hold, there was a time and a place where I was holding on, biting my nails, and I'll be honest with you, at some point losing a little bit of sleep, simply because I'd seen the shares decline to a price of, I think it was 64 cents or 67 cents in and around that time. And I remember it very clearly because it was in and around December time, festive period, Christmas in the UK. And so like I said, you have to endure, you have to have the ability to kind of manage and control your emotions and endure and hold on. If you have conviction in the stock and the leadership and what the company that you've invested in are doing, you have to grit your teeth and kind of go back to your initial thesis as to why you've invested in the stock, which is what I had to do. At the same time, I was incredibly anxious, nervous, frustrated, and constantly checking the share price all the time as well. And so the massive decline that I was talking about was largely due to this announcement, which caused panic in the market. Precigen announces $79 million private placement offering of convertible preferred stock. The private placement was led by affiliates of Patient Capital Management, with participation from Bill Miller, Randall J. Kirk, Executive Chairman of the Board of Directors of Precigen, and certain other investors too. With investors will have rights to exercise warrants to purchase 52,666,669 shares of Precigen's common stock at an exercise price of 75 cents per share. And that's exactly what caused this decline to 69 cents. And so despite the severe decline, off the back of that news that I've just mentioned, I still managed to hold on. Why was that? And it was like I was kind of talking about earlier, it was largely to do with the leadership, with Randall Kirk. Randall Kirk has a fortune of $1.4 billion, which you can see here according to Forbes. And he's amassed this through building out pharmaceutical companies from scratch when they have no treatments, to then selling them on when they have their first FDA approved treatment. And so he's cashing in at a peak period of that company that he's built out. And that's where he's made his 1.5 billion fortune. You can see here that he sits on the board of directors of Precigen. He also holds a 5.95% stake. And you can also see this 33.5% stake held in Third Security LLC. And actually, Third Security LLC is an investment vehicle, an investment arm owned by Randall Kirk. You can see here when I go onto their website and onto our people section that Randall Kirk is the chairman and senior managing director of Third Security LLC. And so back to my initial investment in Precigen and how I remained bullish and confident to the point where I was able to make entries into the stock and get this mean price of 0.97, and it comes back to investing with individuals. That's probably my primary philosophy when I'm investing, certainly in biotech and early stage pharmaceutical companies. It's very unlikely that I'm going to go into a company where I don't really see a strong leadership, strong individual who has a proven track record of having done that before. Effectively, what I'm looking for is proof of concept. So I'm looking for someone who's amassed a fortune, the likes of Randall Kirk, and I've spoken about others, the likes of Philip Frost, the likes of Dietmar Hopp and Patrick Soon-Shiong. All of these individuals are billionaires who have periodically throughout their career, and the career spans 30 years or more, is that they've built out these pharmaceutical companies before, they've sold them out before, and with that there's that proof of concept that I mentioned. They have the proven track record, they have the character, the mental fortitude to overcome setbacks, and most importantly they have the finances. All of those individuals are billionaires. They all have set up individual investment firms affiliated to them that they can then use to continue to bankroll these respective companies, pharmaceutical companies and early stage biotech companies that they run. And so there's this damage limitation, if you like, to a point as well, in the sense that historically a number of biotech companies and early stage pharmaceutical companies, they go bankrupt. Whereas here, if you like, there's this level of insurance because you've invested with this said individual who not only has the proven track record, the 30 plus years experience in the sector, but they also have this investment arm or investment vehicle that they use to continue bankrolling the company as well.